Hey everyone, welcome back to Corporate Decoder, the place where we decode Wall Street's secrets for you. Today we're diving into Brand Engagement Network Inc.'s latest report. And let's just say things are getting interesting with some behind the scenes changes and important shareholder votes. So what exactly is this filing? It's an 8K report, which is like a company's way of telling the public about big things that just happened. Think of it as a public announcement for important company news they need to share right away. We're looking at Brand Engagement Network Inc. today, a company that deals in common stock and redeemable warrants. They're registered in Delaware and, crucially, they're still considered an emerging growth company. This means they get a bit more breathing room with some financial reporting rules, but also that they are still relatively new on the scene. One of the key pieces of news here is a change to how Brand Engagement Network Inc. runs its shareholder meetings. The company's board of directors made a decision to amend their bylaws. Now, normally to make big decisions at a shareholder meeting, a specific minimum number of shares, a majority, needs to be represented. This is called a quorum. But Brand Engagement Network Inc. has decided to change this requirement. They are reducing the quorum needed from a majority to just 1/3 or 1/3 of the shares that are allowed to vote. This change sets the stage for the company's annual shareholder meeting that happened on the 26th of November 2025. On the record date, the 3rd of November 2025, there were nearly 45.2 million shares of common stock out there that could vote. Now here is something interesting, only 37% of those shares were present to form a quorum. If they had stuck with the old majority rule, they might not have even had enough people present to make decisions. So this bylaw change really made sure they could get things done. Let's look at what happened at that meeting. First up, they elected 2 new directors to their board. Dr. Rui Carrasco and Thomas Morgan Jr. were both elected for a 3-year term. Dr. Carrasco received over 16.4 million votes in favour and Thomas Morgan Jr. also got over 16.4 million votes in favour. This shows shareholders are confident in their leadership choices for the next few years. Next, shareholders had to approve who will be auditing their books for the year 2025. The company proposed LJ Soldinger Associates, LLC, and the shareholders overwhelmingly agreed. We saw a massive 16.6 million votes in favour of this, with only a tiny fraction voting against it. This means the company is getting a stamp of approval on its financial watchdog. Now for the really interesting part, Proposal 3. This concerned a reverse stock split. What does that mean? Basically, the company plans to reduce the number of outstanding shares, but increase the price per share proportionally. For example, if they do a 1-for-10 reverse split, every 10 shares a shareholder owns will become 1 share. But that 1 share will be worth 10 times the old price. The company is giving themselves the flexibility to do this between a 1-for-2 and a 1-for-10 ratio. This is often done to boost the stock price to meet exchange listing requirements or to make the stock appear more valuable. Shareholders approved this with over 16.4 million votes in favour. This indicates management has a plan to potentially improve the stock's market perception. Finally, we see a mention of Exhibit 3.1, which is the actual amendment number 1 to the bylaws of brand engagement networks. Incorporated, this is the legal document that formalizes the quorum change we discussed earlier. It is the paper trail for their operational adjustments, and of course there is the cover page interactive data file, which is standard for these filings. So what's the big picture here? Brand Engagement Network Inc. is making strategic moves. They've smoothed the path for shareholder decision making by lowering the quorum requirement. This isn't necessarily a red flag, but it means fewer shareholders need to show up for important votes to pass. The election of directors and ratification of auditors are standard procedures, showing continuity. The reverse stock split, however, is a more significant step. It usually signals a company's intent to increase its share price and potentially attract new investors who might be put off by very low stock prices or to meet stock exchange rules. This could be a positive sign of ambition, but it also sometimes means a company isn't satisfied with its current market valuation. Looking at the numbers from the meeting, a significant portion of shares were represented by proxy, not necessarily in person, which is common. The overwhelming support for the proposals suggests a level of trust from the shareholders in the current leadership and their proposed strategies for the company's future. The company has a lot of these redeemable warrants outstanding too, which could mean future dilution if they are exercised, so that is definitely something to keep an eye on. Alright, that is our breakdown of Brand Engagement Network Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Are you excited about the potential for a reverse stock split or concerned about the lower quorum? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. You can join the conversation there. Thanks for watching. See you next time.